Hello, I'm Michelle Winters, and I'm here with our special guest, David from Price Management. And we'll just get right down to it, David, because this time of the year is pretty hectic for you, huh?
A little bit.
Yeah, you're pretty busy over there. Can you tell everyone just a little bit about what you do?
So I provide remote bookkeeping services to other businesses.
Mhm.
I have obviously the Floor Doctors, which is a flooring store, which was my husband, and I have a restaurant, some nonprofit, homeowners associations, and a few other things.
So you really understand the flooring business in particular because you are married to the flooring doctor.
Yes,
Okay. And in addition to that, you have how many kids?
5.
Five children, one of whom, Jordan, is very special to us because she is our youngest member, and boy, is she a go getter.
Yes, she is.
Fun stuff. So, excuse me. Let's talk a little bit about running your business by your numbers. What are the things that you're seeing that are commonly overlooked when owners and managers are trying to make financial decisions?
I see. So I think a lot of it is trying to judge how well you're doing by how much is in the bank account,
Mm-hmm.
or trying to judge what you can do financially by what's in the bank account. And that's where having a good accounting professional or a person on staff to make sure that everything is entered and it's categorized correctly. Outstanding bills are entered so you know what you have for payables outstanding, so you know what is coming up and what needs to be going out. Um, if you have any outstanding checks or anything that's entered but hasn't cleared the bank, is obviously going to reduce what you can, but the bank still shows that you have more.
Mm-hmm.
I have a lot of experience with that, and then you have overdrafts, which are really fun, depleting your bank account even more, reducing spending power.
Mm-hmm.
So you want to be careful of those things. I think is probably the biggest. Um, and then a good review of your profit and loss statement, I think, is probably secondary. Knowing where your money is going every month and to what, keeping a tab on expenses, making sure that you're not exceeding something without knowing it. I'm just trying to see where you can maybe trim the fat, or maybe expenses have gotten out of hand and you need to re-review uh, particular vendors who you're purchasing products from, that maybe you can say, hey, we've spent this much money with you over the last so many months or over the year. Can we get better pricing to help push those costs down?
Right. And the flooring business has some intricacies. You know, we take deposits, and those deposits could be going towards a job that is within the month, within the next month, all kinds of things. And then we buy some things kind of in bulk, and others stock, and others as needed. So there's some fine details that can make interpreting financial statements just a little bit trickier than in general, right?
Yes. Yeah. Um, so knowing, like, if you're doing a deposits and keeping those, holding those, you need to make sure that those are allocated correctly, and then when the job is done, that they are correctly reallocated against the job, so that way everything is flowing and reflecting of what's actually happening.
Mm-hmm.
Um, it would be another big, probably, stumbling block, I would say.
Yeah, but if those are entered correctly, then at any time you can look in your system and see where you actually stand versus what your bank account may be leading you to believe or misleading you to believe.
Yes, very much so, very
Mhm.
much so.
So, where do we start?
So I'm just going to follow through on the um, little dealy bob that I sent over. I don't even
David
know what to
created
call
a participant guide for us, which is available on our website, and I'll drop the comments to it I'll drop the link to it in the comments when I hop off of this video. But he highlighted the 3 main financial statements that you need to understand, and we're going to go through that.
Perfect. So beginning with the balance sheet is the assets, the liabilities, and the equity that you have in your business. Assets are things like cash on hand, money in the bank. If you have fixed assets, like any equipment, vehicles, trailers, and what those values are, minus any accumulated depreciation. Liabilities would be your accounts payable, loans, notes, credit lines, etc. And equity is what is left over from your assets if you were to pay everything off. And so that's your chunk in the business, what its current kind of standing. And so that gives you an idea of kind of where things financially stand. Moving down to the profit and loss would be, it's the reflection of all of the money that's come in and all of the money that goes out and how that breaks down. So you can get as detailed as you want or as general as you feel comfortable. I generally like to see income, discounts, refunds, so you know where those are coming from. And then we use QuickBooks presently. We're in the process of transitioning to something that is flooring specific. But you can use, in QuickBooks, you can use products and services to get more detailed reports of what products you are selling the most of, and what income is generated from each of those. Expenses, you want to break that down to kind of like your overhead. What does it take to generally, keep the lights on, rent, utilities, staff, and then you're going to have sales expenses, marketing, advertising, and installer pay, supplies, materials, etc., that are going to be coming out of that as well. Also, in that, you should be able to, in your system, you'd want to be able to know what products are expenses by vendor. So you want to know like who you're giving the most money to, either by your installers or by your vendors, and then leverage that also to say, hey, we've spent a lot of money with you. Can we get some of this down and get better pricing so that your bottom line looks a little better? And then the statement of cash flows is kind of a combination of both of those reports. So it's going to show you what your cash on hand was at the very beginning of that period that you're running it from, any outstanding accounts receivable, whether you have credits or you have an actual balance, paying off any liabilities, and then net income or net loss for that income, net income or loss for that period that it's run for, and then all coming down to what is your ending cash balance. Kind of shows you a different perspective of how things are running. Do you have any questions?
So one of the things that I see commonly is people asking questions like, I need this. How do I decide how much I can afford on it? For example, I really need to hire that next person. How do I determine their payroll? And so quite often they're looking at things like the going rate or what their competitor is paying, when really what I think they should be looking at are their financial statements to determine, you know, what they can be paying that person. So where do you find that, and what's a good rule of thumb?
Um, I would personally look at, I mean, what is your cash flow? What is your sales? What would you expect someone coming in to increase your sales? Is that increase, and then how long do you expect for that increase in sales to take? Like, what does that kind of that bell curve look like? And
Mm-hmm.
then, do you have enough funds to kind of, in essence, float that payroll in whatever way you decide to do it, like a draw for so long or a salary until their straight commission amount would exceed that, and then they would move to straight commission. Or I think it depends on how you want to pay them, what your going rate is for a salesperson in your particular market, and then how aggressively you want to grow.
Is there a formula for that, or a particular percentage that you say is like a safe number?
There probably is. I don't know that. I
Hmm.
would, I guess I would go, I personally run more of by gut, like knowing, like talking with Chris, like, this salesperson would need to do this much money. Can we afford this much more towards payroll every week or every other week for at least 3 to 6 months for them to ramp up? Is
Mm-hmm.
that increase in expense going to um, put a terrible strain on the business? Is it going to kind of hurt because you don't have that, but it's doable, or is it a non-concern?
Mm. So for people who don't have that sense of intuition when it comes to books like you do, um, there are solutions like what you offer. Isn't You're out of house, but you're in there with them. You can quickly turn around the reports they need. So
Yep.
what are some ways that people can find somebody like you who's familiar with flooring and also has the credentials you do?
So I've gotten client leads from something called bark.com,
Mm-hmm.
and you can provide, like, if you want someone locally within your area to come into your place to do your books for you, or if you are fine with someone being completely remote, like I am. Like, I have clients in Florida and Washington, and a few here in Des Moines as well. And it works really great for me. Everything's very digital. And for flooring, I mean, most everything is either invoices are emailed, or they're available by the websites. There's only a few small ones that I only get mailed invoices, and that's not very hard to shove it through all-in-one printer scanner and email a PDF off to your person.
Right.
Um, you'd enter in some specifics of what you're looking for, um, how often you want them to work, and then it shows out to a number of people who meet that kind of basic criteria.
Mm-hmm.
And generally, you'll have probably 5 people ringing your phone or emailing or texting or whatever your preference is within minutes.
And
And
that
then
platform, Bark.
bark.com, like a dog barks.
Okay.
Uh, and then I would highly recommend to not go with the first person that you make contact with. I would really run them through the ringer of questions and what they do, how they do it, what their preference is, what your system is. I know that's a really big thing for me. So I have all of my clients, with the exception of one, are on QuickBooks Online. And
Mm-hmm.
so that makes it really easy for me to work within. Um, I'll jump around from my customer or from my clients, and then when I have to move to the one who's not on QuickBooks Online, I have to rethink what I'm doing and readjust to that system.
Mm-hmm.
So not everyone is going to know your system. Um, and so that's probably going to be a little bit of a hurdle to get over. But then ask them questions, referrals, what their experience is with inventory and job costing, because those are two really big things with the flooring industry. You want to know, like, Sally Johansson had this flooring project in her house. Like, did we come out ahead or are we way behind? You want to be able to pull a report to know how that project went.
Mm-hmm.
And how you can fine tune that later. And if you're not doing that correctly, you're going to have real bad reports, garbage in, garbage out. You're not going to be able to know that kind of stuff. And inventory, like you said, buying a lot of things in bulk to get better pricing. Like if you have, I know we have, the Floor Doctors has a like in-house emergency room or whatever branded carpet that they buy like 3 rolls at a time. And that's great for flips or property management companies or people who are trying to sell a house who just need nice looking, nice, new, fresh smelling carpet to make the house market better. And it's just an easy thing to keep in stock to put in. But you need to know how much you have, how much you have left, and what's allocated to jobs, so you know how much is remaining for other jobs before you need to reorder. All of those things are really important and things I would make sure that your accounting professional is familiar with and is good at doing.
Good information. So I know a lot of people when they're building, we have a question here about utilizing loans.
Yep.
People are building a business. The question is cash still king? What do they need to pay attention to?
I would, yeah, I mean, cash on hand is certainly better than spending money to have a loan from any lender. But it also depends on what the purpose is for. So if you can have cash, build cash on hand, because you know that you're going to have a large expense or large purchase coming up, it'd be great to save and kind of earmark some money in the bank for that. But if not, you can always, not that it's easy. Um, as anyone who is self-employed or has a business knows, that getting funding from banks is not the easiest process. But you can always do loans for large things, which provides its own benefits of such.
Right. And another question about owner's salary, determining how much to pay themselves. Is there a downside to not paying yourself? What's your advice for the business owner that wants to stack up that cash on hand, but also needs to feed their family?
Right. We all have to pay the mortgage, right?
Mm-hmm.
It depends on, in part, on what your legal or your taxing entity is, on how you pay yourself. If you're an LLC or a partnership or being taxed as an S corp, how you're paid depends on those things, and that would be a great conversation with your particular tax person or your accounting professional. I would look at kind of market salaries and see what that looks like. You'll want to, and that's something that can be adjusted if you know that you're sitting good at home and you need to ratchet down your salary a little bit so you can put some of that money aside for a large expense because you don't need it at home, or you're not trying to qualify for a mortgage in a few months or a year or whatever. And you can bring that down to allow more cash to remain in the business. That would be an option. But I think kind of goes along with the profit first ideology. I
Okay.
mean, you have to earn a living from this also.
And that's a book that you're referencing, Profit First.
Yes. Yep. I have not read it. So I'm not terribly familiar with it, but the idea is that, I mean, you need to be able to be bringing in something
Mm-hmm.
to make this worth it.
Right.
You have to, I mean, I'm sure everyone has families that they have to support too. So I have to make sure that the mortgage is paid, the heat bill is paid, food's
Mm-hmm.
on the table, and go from there.
So Profit First, that's a book that has been recommended by many an entrepreneur that I respect. So one to check out if you haven't already. And David, I know you mentioned bark.com is a platform where we can connect with other accounting professionals. Can we get a hold of you?
I don't know that I have the capacity to take on another flooring store, but if
Sure.
anyone has questions that they would like to reach out directly to me to have a chat or kind of a mini consult, I'd be happy to lend my ear and my opinion and whatever expertise can be um, shared from that.
Okay. And you gave us your contact information and the cheat sheet that you sent me, which is available for download on our website. The link is below on the screen, and I'm also going to drop it in the comments when I hop off this video. But there's a good recap of everything that David explained, along with a download that you can keep at your desk for reference, and his contact information there below. But don't bother him too much. Busy man.
Tax time.
running,
I
running
love
the
it.
numbers for the floor doctors, which if you haven't checked them out, that's a pretty cool group and really knocks it out of the park on marketing, right? How much
Yeah.
do you spend on that? Can we afford that?
Ooh, it's increased, but sales have increased accordingly. So
Interesting. So when you're coming up with marketing ideas and considering advertising venues, take a look at what the floor doctors have done with their local television commercials. They're pretty stellar, and it does not surprise me that that business has increased as a result.
yeah, radio started as of today, this morning.
Oh,
I got to hear. Obviously I heard the radio spots before they aired, but I got to hear it the first airing this morning on the way into the office. So it was pretty exciting.
that's awesome. Very cool. Well, we appreciate your time so much, and we'll let you get back to it and see you around. Thank you.
Bye, everyone.
Bye.